Bring that ass back like a boom, 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 boom.
Hey everyone, this is Supernova and you're with Boom Traders, our weekly overview for week 11th of 2022. And as usual, we're going to start with a session overview. Our session will contain of our risk-based model, the tactical trading environment, the current market, and then we're going to do a summary. So let me just start with this. Our signal moved to neutral during this week. You know, we saw 4 days of advance for the major indices. So that was good enough to move our signal to neutral. Now we still don't have a clear buy signal, but at least we are back to neutral. And as you can see in our slide, the sell signal was issued last year on the 22nd of November. So this is the first time I believe we're having it on neutral since then. Now the components of our risk model, the general market is still in negative. It's very close to being neutral. And the only reason why we're still keeping it at negative is because we are not still seeing any consolidation in the major indices. Yes, we had 4 days of rally, and especially for the S&P 500, we had 4 days with more than 1% rise in price, which is the first time since the COVID crash in 2020. But still, we have not seen any consolidation at these higher prices, so we're going to be waiting for this to at least form some sort of a consolidation or a base. Now, something that we will see a bit later, we've already done on the Russell 2000, the small caps, and we are actually trying to break out of this lower zone consolidation. So, the general market is still in negative. However, the up-down volume is neutral, so the number of advancing versus declining issues is almost at zero now. I'll show you a little bit later when we're looking at the market internals what exactly I'm looking at. And then the new highs, new lows, still negative. Very few stocks are making new highs. Yes, new lows are on the slope down, but the new highs are far and few in between, so you will see this, so we're keeping this negative. However, the stock participation moved to positive because most of the stocks did participate in this bouncing that happened in all the major indices. So we're going to take a look at this as well when we're looking at the market internals. Now, our tactical trading environment signal moved to yellow, which still means that the market is highly rotational. Now we're moving out of energy stocks, although some of them are setting up again. We are definitely moving out of gold and silver. You will see gold and silver recorded some significant drops or breakout failures, if you want to put them this way. And some tech is actually starting to bottom out, and we've had nice breakouts in some of the chips like NVIDIA, AMD made a nice recovery, Tesla made over $60 in gains from our signal at $848, so now it's trading at I think 906. So overall we had some good trading setups. Some breakouts did actually work out well, so the market again is still highly rotational. You can trade, but use some caution. Now, with this out of the way, let's move into the market itself. Let's look at the chart of the indices, gold, crypto, oil, bonds, you know, the market internals. Then we're going to look at the top and the bottom industry groups, the rotation within those groups. Then, of course, take a look at sentiment, and then we're going to do a quick summary of the entire market environment. So the first index I want to start with is the S&P 500. And looking at the chart, there are a couple of things that are easily noticeable and we need to pay attention to them. Now the first thing that I want to mention is we were able to hold this rising support line right here around 420, and we bounced hard. Now Wednesday had a gap up, and then we followed by 2 gap downs that were quickly filled and moved to the upside. Now that's the preferred way to do it. What is bothering me though still is that although we were able to clear those resistance lines, we still are below the 200-day moving average. So we're still in sort of a bounce bounce situation in a bearish market. So we're still not cleared up to go higher and higher and higher. Now, the other thing that does worry me a little bit is the lack of volume that is participating. Now, we definitely, we can see here we had the volume on Wednesday when we had this gap up, but the other three, so we have Tuesday, Thursday, and Friday, were relatively low in terms of volume. So that might suggest that there's not enough steam in our train to keep on moving upwards. But again, we'll see. Now, the biggest challenge that we see right now is the 200-day moving average. This is the purple line right here. And if we are able to break it successfully, then we're looking at 457, 458 as a zone that might prove to be some resistance with those high bars right here. This is in terms of the S&P 500, definitely looking better than the Nasdaq. Now, let's look at the Nasdaq. Nasdaq is still below the 50-day moving average. This is the yellow line. In terms of volume, we had some push on Friday. So volume was almost at the average. And again, Wednesday was above average, just as with the S&P 500. Now, one thing to see right here is that we didn't actually have a rising support line from below. Like if you remember with the S&P 500, we had it from below. Now, right now, as you can see, this is sloping downward. So this looks more like a bouncing situation, and we were able to break this trend line right here, that is for sure, but we're still touching the 50-day moving average from below, and we are far away from the 200-day moving average. So this is still not looking good. However, one thing to remember is that when we're looking for flag type of plays in a downtrend, we want the flag to be either sideways or upwards. This one is trending downwards, so this may very well be the bottoming action that we're seeing right here, because this type of flags usually resolve themselves to the upside. Now, again, as I said, we need to be cautious here. We need to see some form of consolidation right at this higher zone above the bottom to actually consider this to be tradable. Then let's look at the small caps. As I said, they're performing very well, like much better than S&P 500 and the Nasdaq. And if you can see right here, we have a channel that's been going up and down, up and down. We are above the 50-day moving average, and we are about to break into the higher channel that's been there for like a year or so, consolidating. Now, let me just zoom out, and you can see this channel right here has been forming since, this is February 21. So more than a year, and once we broke it here, that was end of January. So yep, this channel is like 1 year long. Now we're looking at this, and we might be able to break into the higher ground, which will basically mean that this breakdown was just a fake, and now we can be actually anticipating prices to go up and go over this all-time high. So let's look at Dow Jones Industrials. Now the industrials, I've had some drawings here. I just wanted to show you guys what I'm thinking. The industrials rallied really hard, moved above the 50-day, close to the 200-day, which is starting to slope down. Now I'm guessing this slope down will be negated if we are able to break on top. And what I wanted to show you guys here is that although I'm looking for some upside movement right here, all the previous moves to the upside were pretty much the same in terms of length, and we're forming this downward sloping channel. So right here in confluence with these trend lines on the top and on the bottom, we're looking for a downward looking channel. So we might hit some resistance in this area around the 50 and the 200-day, and if we are not able to break it and test these highs right here at 357, we might be looking for tests right here down low on this channel in 315, 370, 315 zone. So we're still not out of the blue, as I said. Now, this is as it pertains to the indexes. Now, let's take a look at what we have with the gold, crypto, oil, and bonds. As I said previously, gold and silver tried to break out, and it failed. like it failed with an exhaustion move to the upside. You can see this candle right here on incredible volume. It's usually an exhaustion type of play. You can short this, and it moved back to the highs, the break of the highs of the consolidation area. So this was the consolidation area. We tested these highs right here. We moved, we gapped on top of it. We moved back. Now we broke out, and then we failed, and we are still holding this area. So if it can hold this area, it might be reversal recovery, but if it does not, I'm looking at for a move down here to the 200-day moving average. Basically same thing with silver. If you look at the SLV, it tried to break out, and it actually undercut the high of the breakout zone. So this is actually looking worse than GLD. Now, one thing I want to mention, if the market is moving up, usually gold and silver will suffer. So gold and silver are generally seen as hedging plays. So I'm not really surprised that gold and silver is suffering now that the market is rallying. And should the market, of course, plunge again, then you can expect to see some similar type of action in terms of gold breaking out to the upside. Now let's look at oil, then I'll look at the bonds, and then I'll leave the crypto for last. So this is oil. Oil was moving very nicely in this channel, tried to break from below late 21. It got some support of the 200-day moving average, and now we were able to break out of this channel to the upside. Now here's the thing, the major reason that oil actually was able to break out is because of the tensions between NATO and Russia. And since Russia is the second largest producer of oil in the world, there was thinking that there might be some shortages. Now, I'm the first one to probably say this, but I don't really think this makes any sense, because this gives more business to US companies that have been actually closing down due to the low price of oil last year. And on top of it, Russian oil that pretty much nobody wants now is offered at huge discount. So there is enough oil in this world, and nobody actually benefits from higher prices of oil, because this will make the adoption of EV faster, and basically oil companies and large countries that are dependent on oil will actually suffer. So nobody really benefits from this high price of oil. So generally, I don't see any fundamental reason for oil to go up. It just makes no sense to me. So I'm thinking that this is basically just a shock reaction from the market. And I think that should we smooth down a little bit in terms of geopolitical tensions, the oil price will at least get into this channel, if not go quite lower than that. Last but not least, here, let's look at TOT, and then we'll switch to crypto. Now, last time we spoke about the bonds, I was telling you that they are forming a bearish flag, and they can break out to the downside, and that's basically what happened last week and the week before that. It just moved through the bottom of the channel, and it went down the downside. Now, one thing that I want you to notice here, and I don't know if I can do this in TradeStation, but usually with bear flags or with bull flags, it doesn't really matter. Your target will be 100% of the move before the flag forming. So if this is my flag and this is the move that I'm having right here up to here, so basically this is a move, let's just put the crosshair here. So this is a move from, let's just say 142 to about 138. Then once this break, we're looking for the same 4-point move. So we're at 137 to about 132. It's basically 100% extension from the bottom, or 100% extension from the top, depending on what you're looking at. Now, looking at the chart of Ethereum, and now we're in crypto space, I'm sorry I didn't announce that, but looking at the chart of Ethereum, the thing that you can see right here is that we are respecting this rising trend line from the bottom. Volume is predominantly bullish, so this is good. And then we have this resistance line on top. Now, if you break this, I'm looking for a move up to about 4,000 when we have a lot of volume trading at those levels. So with the recent developments in the market and the way that the general market is trying to bounce from the bottoms, I think that it's fair to assume that we're looking at levels of about 4,000 for Ethereum right now, and if we can break that, you never know, to the moon, as they say. Now, in terms of Bitcoin, Bitcoin is basically looking pretty much the same. We're forming the same flag here at the bottom. Now, one thing that you might be a little bit concerned about is that the standard Dow Jones theory says that after a move down and consolidation, the price usually resolves to the downside. However, I haven't really seen this with crypto play out well. And as you can see here in the chart of Bitcoin, we have this consolidation after a drop, and it actually resolved itself to the upside. We've had this consolidation area right here with some support zone, and it just blasted to the upside. So it's actually looking like a bottoming action and trying to form stage one from where it can actually break. So I'm more bullish than bearish looking at the charts of crypto right now. Now, in the next section, we're going to take a look at the market internals, and we're also going to take a look at VIX. So you have a better understanding of how we're creating the risk vest model and how do we create those signals that we are telling you about. Alright guys, with the crypto, I'm going to cut this episode right here. I'm going to split it in two again. I don't want to go over 20 minutes, so I'll see you in the next episode, and we're going to be talking about the market internals. Then we're going to look at the top and bottom and industry groups sentiment, and do a summary of the market conditions and what I think it's appropriate to do for the next week. So I'll see you very soon.